Financial planning is an established industry with a lot of inherent flaws that need to be fixed. Has it always been this way? Is there a better way? In order to look ahead, we need to go back, way back to Antwerp, the birthplace of the first economic golden age, which bred the first investment opportunities, and with that, the first stock exchange of sorts, minus stocks, that is. This new art of investing could mean tremendous gains or devastating losses. Yet world trade grew, the East India Trading Company formed, and the London Stock Exchange opened its doors. The new world ushered in a whole new place to invest, and an exchange that would grow to rival London's. And for the next 100 years, it's been boom after bust after boom. Then came the 1920s. Businesses expanded, stock prices soared, credit was plentiful, and soldiers returned home with money to spend. Until 1929, the big crash. Recovery took almost 20 years, and with it, the emergence of a new middle class that would demand better investing advice and opportunities. Enter the late 60s. A group of like-minded advisors got together to try and fix some of the industry's ills, and that was the beginning of the financial planning profession. Technology would arm advisors with the ability to provide better advice. In 1971, NASDAQ arrived on the scene as the world's first electronic stock market. But this wasn't enough. Advisors continued on their white-knuckled ride. In 1973, the London Stock Exchange lost 73% of its value and rippled its effects around the world, affecting life right here at home. Our ability to invest wisely was compromised, so the US hit another recession, and the dreams of many were, once again, lost. Suddenly, the role of financial advisors became even more crucial. A double-dip recession lasted until the early 80s, with interest rates at their highest levels ever. Then came the Reagan years, with huge changes to the tax code and new ways for planning for retirement. Things were looking up, until Black Monday. In October of 1987, the 90s brought more booms and more busts. We saw .com and .bomb. Then, in 1999, one man cried, "Stop!" Dave Loper had had enough. So he developed the industry-revolutionizing financial planning software called FinanceWare. He did it to help people make better choices when it came to their money, to help them make the most of their one and only life, and to help advisors get off the roller coaster and smooth out the road ahead. FinanceWare was a hit, and quickly became known as the innovator of the financial industry, helping build advisors' confidence. The company's ideas were so big that they were patented across the globe. FinanceWare's probability model helped advisors measure uncertainty, taking into account client choices and the priorities among their goals. There was even a built-in early warning system to prepare clients for the inevitable uncertainty of the markets. But still, the unknown was creating fear and anxiety. FinanceWare continued its innovations, asking, what can we do to help this industry more? Because the industry had lost its way, they realized that common beliefs were inherently incorrect. In fact, they were harmful. The company knew that it was time to defy the common. So in 2003, they shifted the industry's focus from simply chasing returns to actually helping people achieve their life goals. And WealthCare Capital Management was born. And in 2011, WealthCare introduced the Unified Managed Household Program, combining all of its powerful ideas into one client-focused platform. So now, financial advisors can deliver comfort and confidence in these volatile times. Instead of exposing clients to unnecessary risk, they can temper that risk based on what's necessary. Instead of chasing returns, they can help deliver dreams. And instead of holding on and going along for the ride, advisors can take charge and feel confident in the guidance they give. So while the market will still have its ups and downs, there is a better way, a more confident way, for WealthCare advisors and their clients. It's the WealthCare way, and you're invited to join us.